Great Tech Reset of 2025. I am Garrett Baldwin. I am your host. We'll be joining a little bit with Gianni DePoce in a moment, but just real quick, just going to give everybody a little bit more time to jump into the room. Mr. Joe out in Las Vegas, good afternoon. Hello, Bob in the Philippines. Thanks for joining us all the way from the other side of the world. I hope everybody is having a good day, wondering where everybody else is from. We got Jerry in Chattanooga. Eric, we know where you are, down in Northport, Florida. Everything doing well here. Eric is talking about our trade right now, focusing on Lyft. Hey, it's your call, man. If you want to go higher probability of profit, go higher probability of profit. We're going to be talking about a lot of tech today. So everybody just settle in. We got a couple of rules that we'll be talking about momentarily on what you need to do to take advantage of today. H-Town. Oh, wow. All right. 87 degrees down in Northport. I am up in Maryland. I have gotten away from that hot heat. Big Ten country in Ohio, Queensland, Australia. Jack in Gulfport. Hello, everybody. Well, we're going to get ready to go. Just a minute or two. Curious, what you guys are trading, what you're focusing on today. We got a lot of, choppiness, looking at the oil markets, energy pushing under its 20-day moving average. That's created some opportunity for traders. We're seeing a little bit of a squeeze today on some of that after that push at the beginning of the day. We got UK Ray has made it in. Vin from sunny California. Is that the name of a town? Is sunny California the name of a town, or are you just saying it is sunny? You let me know. All right. So taking a real quick look at that. Another person, Gulfport. Okay, we got Gulfport. Is this going to be recorded on YouTube? Yes. Don't worry about that. There will be plenty of opportunities if you miss anything or you want to review it, because again, some things you might need to see once again, but there is a lot going on in this market. We're going to be talking about three really important trends. They're going to be heating up over the next couple of weeks. Sacramento, California, congratulations on your new baseball team. Apple Valley, California, no baseball team. That's okay. We'll figure that out. But overall, the only person from Normal, interesting, very interesting. Once again, very strange little market today. Cocoa, your worst performer. Soybean meal, up. Everything else, just straight chop. 30-year bonds are up 0.4%. Dow Jones, 0.36. S&P, 0.32. Copper, 0.3. 10-year note, 0.3. Corn, 0.3. Nothing else really getting beaten up. Brent's down 1% on the day. The VIX has turned back. Now down 2.5%, down 2.2% on the day. So once again, we're in this very difficult environment where people are looking for direction. They're trying to get a good sense of where the market turns next. You have this concept and focus around, hey, we just came out of this massive downturn in early April. Huge move off of all-time highs in February. We get all the way down to 48.50, bounce off that bottom. And there's a lot of noise in this market. You got a lot of things happening today with trade. You have a lot of questions right now about what's going on with Japan. If you get too distracted by all of these big things that you don't have control over, you're going to miss the opportunity to take advantage of something that you can control, and that's taking advantage of what Gianni and I will be talking about today, that great tech reset of 2025. We're going to get rolling right now, everybody, and hello from northwestern Montana. All right, we got a lot of people in places that are not New York and Chicago and Dallas. This is nice to see. Small towns all around the country. Thanks for taking the time out of your day to join us today. Do you record these morning sessions as well? Yes, we do. Good afternoon, Cal. And Northwestern Indiana. Go Purdue or go Indiana? Clarence, you got to let me know. All right, so Johnny's going to be joining us in a moment. Let's get this started. I got a couple of quick announcements that I have to make before we do that. We have a risk disclosure. Listen, we are not financial advisors or broker-dealers. I do not have a Series 65, not registered. That's not, again, we are not officers, employees, representatives, agents, any in that capacity at RIAs. I want to keep this in mind. Securities are using examples in this. We're going to have a couple of key terms you could check out on our site, but return on investment is very important to always keep in mind, understanding how much money you can generate on trades, but we're not talking about the number of trades. This is We ask again, no photography, no recording, no soliciting, but this presentation you'll be able to see. And remember, there are risks in trading. Copyright disclaimer. Again, if you have any questions, you can always reach out to us at support@theotrade.com. Do us a favor. Just watch it. You don't have to send it around. Just watch it. Enjoy the show. We're going to be talking about these different trends. And you have an 800 number that we had. Housekeeping. Again, this is important too. No sound for you. Hit refresh. Let's just type that into the chat and make sure that you have the audio on. Sometimes that doesn't happen. That's okay. We're going to make sure we don't leave anyone behind. Good. All right. This is good, right? We're checking to make sure that everything works. So shut the door, turn off Skype, close your Facebook, put your phones on silent. I'm going to do the same because I have a bad feeling that my wife will call me right in the middle of these conversations. She does it to me every time. You took the time to be here. This is important, so focus on being here right now. The audio is muted on my end. We can't unmute it. That does not sound correct. Can you hear me?
I can hear you. Yeah, I can hear you.
Johnny can hear me. So let's just make sure that we don't have any issues here. The audio is muted on your end. Somebody want to check that? All right, we got Roman, we got good. Look, this is why we have a community of people to provide feedback and instantaneously. If you don't know me, my name is Garrett Baldwin. I am a Hopkins trained economist here in Baltimore, Maryland. Master's degree in economic security from Johns Hopkins. Also studied at Indiana and Purdue. Kind of don't like myself, right? Rivals, but I'm an expert in global equity flows. As you know, if you watch my morning show, I focus on timing around major outflows and inflows in the S&P 500. We have avoided every major downturn since 2020, including the Nikkei crash, the Silicon Valley banking crisis, and that most recent sell-off that happened on February 21st before we went back into positive momentum in late April. I've consulted for a number of international and U.S. financial institutions, including a $3.5 trillion credit fund and Fortune 500 and private equity firms, and I am an author. You have Amazon. You can figure that out for yourself. All right, let's move on. A little bit about this. Why are we here, right? There is a new economic era upon us, right? This is kind of one of those things we talk about. What is the role of technology in economies? This is very, very critical because every new major technology leads to massive waves of change. Think of what happened in the 1990s with the dot-com revolution. Think about the technologies with cell phones that happened in 2008. We are in a new economic era that is heavily tech-driven in a post-COVID world. And what Gianni and I will be talking about today is a great new tech reset that is underway. It is going to be driven by three emerging subsectors. You're going to learn all about this. Get a pen, write this stuff down. We're going to talk about how we can take advantage of it right away. Gianni is a breakout specialist at TheoTrade. If you've watched he and I spoke, you know that I watched him absolutely nail something that I never thought was going to roll the way it did, and that was Uber not too long ago. I didn't even need to know that he had 14 years experience and trading experience because that type of insight showed that he had more than a decade of experience right away. He left the financial services industry after January 2020, and he is a systems builder. He's a retired farmer and outdoorsman. Gotta like that, particularly if you're up in Northwest Indiana. And as he has been seen in Benzinga, Yahoo Finance, Business Insider, and many other publications as well. He has been crushing the S&P 500, 400% since 2020. No, that is not a typo. You can see the performance there. May 16, 2025, 5-year cumulative 513.4%, S&P 500 at 124, Dow at 119, MSCI at 74, and that Bloomberg municipal figure, again, you're not seeing anything that you would need to adjust your eyes. It is all right there, absolutely crushing the S&P 500 since COVID. And as we move into a deeper conversation today, right, only in today's presentation, we're going to be focusing on his brand new lotto trade. So again, he is targeting the biggest gains in the shortest period of time. And we're having this conversation because on June 4th, Gianni is calling what he is dubbed an ignition point. You do not want to miss this. And now we're going to introduce him for the countdown to the tech reset, the three explosive catalysts. Everybody, please welcome Gianni DiPoce.
Hi, everyone. Garrett, thanks for the introduction. It's great to be here.
Absolutely. Good to see you. Well, I know that you got a lot to share with us today. We got plenty of time. We've set some time apart. You got a lot of people in the chat. Guys, I know that you have questions in the chat, but do me a favor. Just hang tight. We'll answer all of your questions toward the end. I want to make sure that we get through all of us. So, Gianni, I'm looking forward to this. The floor is absolutely yours.
All right, Garrett, thanks again. Well, welcome, everybody. It's great to be here with you all. And I'm really excited, very excited to talk to you today about three explosive catalysts. It doesn't take a genius to point out that the world is changing. Things are moving faster than they have in the past, and it's been said that there are periods in history where a decade happens in a week, and there are times where things don't seem to move all that much. And I think that we are in one of those moments in time, one of those moments in history where the world is changing very, very quickly. And so when the world is changing as fast as it is, it opens up the potential for profit. We're market people. We look for emerging themes, we look for emerging opportunities, emerging technologies, and how we can take advantage of those. So I have three big catalysts that are telling me, and I'm going to share them with you today, why we are in one of those environments right now. So let's go ahead and get right into it, talking about the first one. So as Garrett mentioned, spent several years in the financial services industry working with some professionals. I had the privilege of trading a $250 million portfolio early in my trading career. And when you're running a shop that's big enough like that, you get access to some really good insight and research and information. You know, I rubbed shoulders with, at the time, the biggest bond portfolio manager in the world. And I really learned the inside works of how these institutions and how these big money managers make their investment and trading decisions. But I talk about this a lot, and it's something I want to reiterate today. There is a small group on Wall Street, let's call them the top 10%, that does a lot of the heavy lifting for the rest of the crowd. The last thing I want you to be is intimidated by these large fund managers. And when you see these headlines out there like, oh, you know, they're so concerned about what's happening, we're going into recession. Mind you, a lot of them are not really the ones pulling their performance rate. Okay. So the chart that I have here, we're calling this the Great Chase Opportunity because what has happened this year is there was a big panic, the tariff tantrums, as I like to call them, and everyone dumped their stocks. We had one of the fastest market declines in history. So if you are still trading and you didn't blow up like a lot of those funds did, congratulations, you survived. You traded through history. But now we have a situation where the stock market has rallied much faster than many of these fund managers expected. And they're caught with their pants down, to put it lightly. They're underweight, they're underexposed. And the way it works in the Wall Street world is these fund managers have benchmarks to meet, benchmarks to exceed. They have to justify their fees, right? If you put your money in a mutual fund, you put it in, you know, an actively managed account or whatever. There are performance metrics that these fund managers have to achieve to justify their fees. Okay. So when they don't do that, they lose their job. They lose their job. And so what we have now is this really intriguing situation because you have stock markets within a spitting distance of their all-time highs in the US. Across the world, we've seen many markets already go back and make new all-time highs. And you have these fund managers that don't own enough stocks. So what are they going to do over the next 6 to 7 months going into year end? What are they supposed to do? Are they just supposed to sit in cash and say, hey, just keep paying me, you know, that 1 or 2% and, you know, maybe the market will come down? No, they're going to have to chase. They're going to have to chase. And when these big dogs, as I like to call them, have to chase the market, it puts a big wind in the ship's sails, the market's ship sails. And it's a catalyst to push stocks a lot higher. Recession or not, credit crisis or not, these guys need to perform. They need to perform. And they have a lot of cash and they got to put it to work. So that noise that you hear, that is the sound of inevitability, my friends. That is a sign of inevitability. And so, yeah, you know, there are a couple of guys out there, a couple of traders, a couple of fund managers that did buy the dip and they are riding riding the coattails higher of the market. But that's not the case for many. And there's a lot of money still on the sidelines. You may have seen that retail bought the dip, fine. But retail is not moving the market. It's the fund managers that are moving the market. So that creates an environment where stocks are just a couple percentage points away from their all-time highs. And these fund managers are just now starting to reallocate. In fact, it was just last week where they started to capitulate on the bearish side and chase this move higher. We're still early. We're still early. They missed the bulk of the move. So that's catalyst number one. And it's very exciting because I know what comes next from the insiders. Catalyst number two, let's call it the art of the deal. I want you to think about what we just went through earlier this year. There was a big tariff tantrum, and there were a lot of concerns surrounding basically an upheaval of the global trade order. And US markets have absolutely dominated their international counterparts for over a decade, for well over a decade. And in light of all the tariffs that were announced, and they've since been dialed back some, a lot of international investors pulled their money out of the United States. Well, over the last several weeks here, we've seen President Trump go on what I'm calling an international investment tour, securing large amounts of investments from allies and countries abroad that's going to bring money back into the United States. And this is big because they have a lot of cash and we have something that they want. We have technology. We have artificial intelligence. We have all these other very unique and very exciting things that are coming down the pipeline that are going to improve the standard of living for everyone around the world. But nothing's for free in this world. We know that. Nothing's for free. So, we saw President Trump secure investments from countries like the United Arab Emirates, Saudi Arabia. And, basically we were saying, hey, you give us all this money, you commit to investing in the United States, we're going to build data centers in your country. We're going to give you access to this revolutionary artificial intelligence technology and more. We're going to build solar panels, okay, to power this technology in your deserts. You got a lot of sun, right? Let's use it. Let's tap into that. Let's make a deal where both parties benefit. So what we saw earlier this year was a massive overreaction. A bunch of money panicked and sold the lows. They pulled money out of the US, but they're thinking twice now. They're thinking twice now. And here's a picture with President Trump and the Crown Prince of Saudi Arabia, Mohammed bin Salman. And they struck a deal, and they had a really nice visit. Trump was treated very well during his time there, and Elon Musk was there as well, because Elon's got the keys to a lot of this tech. So let's talk about, what some of these components of the art of the deal are. We know that without semiconductors and without chips, none of this new innovative technology is possible. I mean, think about how far we've come from even 20, 30, 40, 50 years ago in computer technology. It used to take, a computer the size of an apartment to perform a simple calculation. Now you have the Library of Alexandria on your smartphone. It's really amazing. So through this art of the deal that we have secured, okay, massive foreign investments coming in from abroad, not just the Middle East, Japan and other allies of the United States are funding US-based data centers and chip manufacturing infrastructure. And what do we want here? What is the new policy that is coming about? Manufacturing and the production of chips in the United States. And so we're looking for foreign financing to do that kind of stuff. Hey, you invest in the US, you help us build this semiconductor factory, we're going to give you favorable trade status. Everybody wants to sell to the US, guys. The US accounts for about 1/3 of global consumption. Without access to the US market, guys, it's a big problem. Who are you going to sell your stuff to? Who are you going to sell your stuff to? Okay. Allied tech flow secured, the second part of the art of the deal. Okay. So there were actually some components of the tariffs and the trade disagreements that were walked back upon, and that includes some chip exports and chip technologies. And basically, we did this to secure the supply chains that are needed to manufacture these chips. Okay. So I don't know if you are familiar with how these semiconductors and these chips are manufactured, but you have the Netherlands manufacturing one part, you have Germany manufacturing one part, Japan manufacturing one part, Taiwan manufacturing one part. So that's all coming back together now. We have fixed that temporary disruption and things are looking on the up and up. And let's be real, guys, the more that we innovate, the more that we create. This is why I focus so much on semiconductors and chips, right? These are just the components that go into the computer that make all the computations and calculations possible. Okay. The demand is exploding. The demand is exploding. There's been a little bit of hesitation amongst some of the big tech stocks in the US over the last few months, but the trend is still up. Their investments in artificial intelligence are still growing, are still growing. So we're looking at US firms like NVIDIA, Advanced Micro Devices, and Intel to get major gains in both government and private sector areas. Okay. So big deals being made. The lines in the sand are being redrawn internationally when it comes to technological sharing of ideas and goods and services. And this is going to open up tremendous opportunities. But I saved the best for last. And what gets me the most excited about what is going on in this market right now. So we have seen a complete shift in the money flows in the market over the past few weeks, really ever since the 21st of April, because coming out of that absolute low on April 7th or April 9th, we didn't really get the strongest signal. But since April 21st, the market's dynamics have completely shifted. And I have this chart here that I want to take a moment on and really explain it to you, because coming out of market bottoms, okay, INFT is just information technology. The technology sector is very well known, has been historically shown to outperform the S&P 500, especially after 10 to 20% corrections. So this chart is showing you the amount of times across various time intervals where the technology sector has outperformed the S&P 500. So, we're about what, 6 weeks from that that correction that we had, okay? And it looks like we really repeated history. I'm not a big believer in history repeating. I believe that history rhymes, but the markets tend to behave in similar patterns coming out of the low, and out of a low that matters, out of a low that's going to stick. So there is cause for optimism. And why is this especially important? Remember, the S&P 500 makes up, or is comprised of, is made up of 30% technology. So a little bit less than 1 out of every 3 stocks in the S&P have some tie to tech. So without technology, this market's not going anywhere, guys. And I'm here to tell you that over the next decade or so, we're probably going to see technology as a component of the S&P 500 grow as large as 70%. I said that, and I'm putting my money where my mouth is on that. Technology is going to become even bigger part of the S&P 500. And here's another way to visualize this. Okay, this is the market, yes, SPY, coming out of the low on April 7th there. And this is XLK, the technology ETF. You can see the performance difference. We're talking about almost triple the performance. That's huge. That's huge. So while everybody was panic selling tech, and a lot of them was Wall Street, a lot of it was the fund managers, it ripped higher. And now we have the signal that things are going to be getting better in the market. Like I said, there's already international markets hitting new all-time highs. And so we have an opportunity today to play catch up with the US, with the S&P 500 and the US market. Amazing times in which we live. Now, many of you are familiar with artificial intelligence by now. I'm sure you've heard about it. I'm sure you've also heard about ChatGPT. But back in the 90s, we had the Netscape that was released. And this completely revolutionized the way that people browsed on the internet and the way they interacted on the internet. Now, this chart is purely speculative, okay? But what it does show is a very close analog, right? We know that the technological changes happening now are happening at their fastest pace since the 1990s. Okay. So this chart, you can see how closely, since ChatGPT was released in late 2022, how closely the NASDAQ composite has followed what it did back in the 1990s. And this chart would suggest, again, it's speculative, but it's hopeful, that there's still a lot of juice left in this rally over the next few years because artificial intelligence is still in its infancy, and artificial intelligence is only the tip of the iceberg. There's going to be technologies that come about over the next few years that we cannot even conceive of now. But we're going to talk about some of them because the stocks exist. And when I say we can't conceive them now, it's because we haven't even seen them live in action there. Not yet. But we're going to start to see these things move. We're going to start to see these things move. So ChatGPT, is it the new Netscape? It sure seems that way. It sure seems that way. Now, let's go ahead and talk about the three subsectors that are going to power the next decade in the stock market and the economy overall. Okay? They're all related to tech, but they're very important and they're very unique, and they're going to improve our way of life tremendously. And there's ways to take advantage of that. So the first sector, what I like to call is super chip technology. Super chip technology. Computing is all about speed. How fast can we complete a calculation? With accuracy, of course. So super chip technologies, I talked about how the tech sector needs semiconductors to make any sorts of advancements. We need stronger computers. We need faster computers. We need more efficient computers. Okay. But there's a new type of computer out there, and you may have seen some of those stocks moving quite a bit today already. And I'm talking about quantum computing stocks. And it's not just that. We're seeing a merge happen now between artificial intelligence and software. Huge. Software's been around a long time. But what we have now is we're applying artificial intelligence to a lot of this software to make it more efficient. So we're combining technologies. And I'm not ruling out at some point that we're going to see artificial intelligence make quantum computing an actual viable technology that can improve our lives on a daily basis. So I want you to think about this from a synergistic standpoint. Is, each of these technologies feeding off of one another? It's really amazing when you think about it, right? So like we don't just use computers now to do math problems. We use computers to shop. We use computers to watch videos. We use computers for everything, to pay bills, to buy things online. So super chip technology. I actually got a chart of a stock here. It's Rigetti Computing that we traded really nicely back in the fall and notched over a 500% gain on this name. So yeah, these themes, they started moving recently and they're starting to move again now. They caught their breath in the first quarter of this year, but they're back on the agenda. Now, one of the other things I want to talk about is you've probably heard some of the doom and gloom stuff out there, and I'm not a big doom and gloom guy. I'm not a big believer of fear. I think fear is a low vibrational energy. I like being optimistic. I think that's why I like to trade, especially. But you've heard a lot about how AI is going to lead to the erasure of many jobs, or many jobs are going to go away because of artificial intelligence. But we need to think about that differently. We need to think about that differently. So there's going to be some displaced workers for sure. But the amount of jobs that are going to be created from artificial intelligence, and this is a graph per the World Economic Forum, okay? And I got to admit, guys, there's a reason why we called it the Great Tech Reset, I'm sure you guys have heard about the Great Reset too, but, that comes from the World Economic Forum. I'm sure you know, okay? Big changes happening over there, by the way, year to date, but I digress. So yes, there are going to be some jobs that no longer exist, but think about what the Industrial Revolution did 100 or so years ago, okay? We went from an agricultural, agrarian-based economy, and that's, close to my heart with my farming background, right? And we went into an industrial world, Well, now technology is bringing us out of that industrial world. I don't want to call it a post-industrial world because we're still manufacturing and producing things like chips, right? But it's the biggest revolution since the Industrial Revolution. And it started in the 90s and it kind of went sideways for a couple of decades, but now it's back. Now it's back. These things don't happen overnight. They don't happen in a week. They take time to play out. So, my message here with this is fear not. Fear not. And let's focus on the 97 million jobs that are going to be created from artificial intelligence and the other technologies that come out of it. That come out of it. The projected growth of AI adoption and market size. Okay, so this is a chart from 2015 to 2035. We're halfway through, so we're right here, right now. And the number of businesses that are adopting artificial intelligence, we're pretty much at the almost 60% mark. Okay. I have found that artificial intelligence is a lot better for doing research than traditional Google search. Google search probably won't last much longer because of artificial intelligence, right? And the amount of companies, the amount of businesses that are tying in AI into their business model is increasing and it's not going to stop, right? So when a business can use technology to become more efficient, that means more profits. When there's more profits, especially if it's a publicly traded company or is listed on a stock exchange, that means there's an opportunity to invest. There's an opportunity to profit on that increased efficiency. More efficiency means more profits. More profits means more opportunities for gains in stocks. This other part here is the global AI market share size. And you can see here, the more that companies adopt it, the more that companies incorporate it into their business model, that's going to surge. It's going to surge. So we're only halfway through the story now, guys. We're early. We're early. So you might be wondering now, with all this tech, where do we get the electricity to generate all this power? I mean, there's still so much contention and disagreements about sourcing energy, but there's been some big shifts over the last 12 months, really. And we're calling it the pocket-sized power revolution. Okay. So obviously there's a lot of battery storage, there's electrical vehicles out there, new technology on that front, more energy efficiency, natural gas becoming a big part of our energy sources. But that's not even the biggest story. The biggest story here is a technology that actually has been brought back to the forefront over the last year or so. And it's small modular reactors. And there are small modular reactor stocks out there. And I've traded them with some success. Nanonuclear energy, it's a big name. It's on the move today, by the way. Nice gain on that stock. But we had a really nice trade on this. Traded this really nicely back last year. And it's, like I said, it's on the move today as well. But what's happening now is a lot of these countries out there are shifting their stances from anti-nuclear to pro-nuclear. They're shutting down the coal plants and they're realizing, hey, we need a lot of power sources. We need reliable, consistent, powerful energy, electrical production. If we're going to have all this technology, you can't have it all, right? Like I said at the beginning, nothing is free in this world. So if we're going to have all this artificial intelligence and this quantum computing and all these other exciting technologies that come to the forefront and make our lives better, we need some way to power it. And this small modular reactor is like a mini self-assembled nuclear reactor, right? So where I live here in Michigan, there's a nuclear plant that actually, powers. I'm on the nuclear grid here. It's about 15 miles away, right outside the meltdown zone, by the way. So that's nice. But the reason I bring that up is because, you have the big stacks that we're used to seeing, on the horizons. With these small modular reactors, okay, that's no longer going to be the case. These are much more efficient. And it's not just countries that are opening the doors, again, for small modular reactors to become a thing. Companies themselves, Microsoft, Google, Amazon, they are turning to nuclear power, again, to fuel their initiatives. Big tech needs nuclear. You can't have the innovation without the powering of that innovation. We talk about how, money makes the world go around. But where do you think that money comes from? What is the creation of that money? You might think, oh yeah, the Fed just creates money out of thin air. Well, I want you to think about that for a second. They create money out of thin air from what? A computer. A computer doesn't just run on itself. The computer runs on energy. Where does that energy come from? Well, there's a lot of different places where it can come from. So money is energy. And without energy, there's not a lot of money. Okay. So the era of plug and play power is here. So small modular reactors, this is the future of energy today. You can see the difference in size. Okay. We're talking about 1/10 or so, 1/10 to 1/3 of the size of the large scale reactors that you are used to seeing on the horizons. Okay. A little bit of an eyesore, but these are not the case. You can even have a situation where local municipalities, local towns, you know, have their own small modular reactors. And this is actually better for safety, right? Because if the grid goes down, believe it or not, when we had the big blackout, I think it was back in 2005 when the Niagara Falls generator stopped working. I was actually overseas when it happened, but it shut down like the whole eastern seaboard in large parts of the Midwest of the United States and Canada, of course. Small modular reactors protect us from that. You've heard the word decentralization a lot recently over the last few years, especially, with crypto and Bitcoin and all that stuff happening. Well, why can't we decentralize energy? We have the technology to do so, and that's in the form of small modular reactors. So these are compact and scalable energy solutions. They're environmentally friendly, they're efficient, they are factory built. We can actually scale this out, manufacture them en masse, and they can be sent to various locations and put together where they're needed. Okay? So SMRs are kind of like the Tesla of energy. It's not just the SMRs, it's the battery powers. Obviously, Tesla's involved in that, but we're seeing energy efficiency reach new heights that we've never seen before. And that technology is finally being brought to the public. And there are these companies out there that are still in their infancy that you can invest in. Okay. So they're perfect for remote towns. We talk about, hey, we're going to colonize space. Maybe let's try to colonize the Arctic or the Antarctic or these remote locations, test these small modular reactors and see how they power a local community. Okay. Also disaster recovery. There were some, tornadoes recently in the Great Plains and St. Louis area. Obviously, there were the hurricanes in the southeast last fall as well. And small modular reactors. These are going to be part of disaster relief efforts as well. Again, you don't need to bring in all these big tankers with diesel fuel and all that anymore. That's the past. There's a new way of doing things. Okay. So this is energy reinvented. Energy reinvented. Flexible solutions for global energy challenges, and they can power anything, anywhere, which is the most exciting. And perhaps my favorite part about it, I have a lot of family in Europe, and I said no threat of another Chernobyl. Bad things happened. When that meltdown happened over in Chernobyl in the 80s. And these SMRs actually have meltdown resistance technology. It's really simple to prevent them from melting down. It's not like a traditional reactor. So you might be asking, like, why haven't we done this before? Why didn't we bring this out sooner? Well, one word, guys, bureaucracy. Bureaucracy. Well, the bureaucracy is finally realizing that if we're going to go into the future, if we're going to have the futuristic technology that we were all promised years ago, we need to have a way to power it. Okay. And it gets even better from here. And this is something that is so exciting for me because we talk about efficiency and the way of making our lives easier. We all work a lot. And there's a big question, how much work is enough work? Well, with this autonomous revolution coming into play, we have smart bots, self-driving systems, and even factories that are starting to run themselves. The autonomous revolution. Okay. We're not going to have a person sitting there and pressing a button nonstop. And this is why, earlier I shared that chart about not being afraid of the job loss and the job displacement that will come from AI, because there will be new jobs that come out of this. And I think better jobs, better jobs. The world's going to change, guys. The world goes through cycles like this every few decades, and we're in one now. And obviously, I have a chart of Tesla here. Looking at it, I've traded Tesla with some great success over the years, and Tesla is at the forefront of this autonomous revolution. They're not the only player, but on the robotics front, you have probably seen those robots dancing. There was a video that was put out recently of these robots, Optimus, I think is what they're called, and they're dancing, and the way they move is really amazing. You have those that robotics company as well. And this technology is only getting better. So what we're going to see now is, instead of people doing that mundane, mindless work, over and over again in a factory, you're going to see the robots do the work. Now, you're still going to have humans involved, because what happens when the robot fails? Okay, the artificial intelligence will probably alert you, but there's still going to have to be some troubleshooting done. There's still going to have to be a human component to this. But what does it do? It still makes everything more efficient. Okay, and so this is a big part of it. In fact, we're talking about the art of the deal and all this stuff earlier, and all this investment coming back into the US, and the desire for more manufacturing jobs. Well, I'm not exactly sold on the manufacturing jobs coming back. And this is a big reason why, because look at the Tesla model. Elon wants robots putting his cars together, right? So it's one of those cases of be careful what you wish for. You might just get it, but that doesn't mean that we can't take advantage of the opportunity in the market, right? And so that has really been growing as of late is self-driving cars. Okay. Obviously, Tesla, a big part of that as well, with the full, automated driving feature. But this is really starting to grow. So here we are. It's grown by about 50% just over the last 3 or 4 years, and it's expected to more than double self-driving car market size going into 2032 is expected to more than double according to Precedence Research. So this is a big part of the automobile industry. I'm here in Michigan, and obviously the automotive companies are investing a lot in this technology, and this is going to become safer too. I mean, when I'm out driving, I see a lot of people on their phones, distracted drivers. Obviously, there's people that are impaired driving as well. Well, if you have a car that drives itself, that reduces the risks, right? It's safer. And I want you to think about the insurance component of this too, right? So we're obviously not there right now, but the way the markets operate is they're always forward looking. They're looking at the future for the investment opportunities and what's going to be popular years from now versus today. And so I bring this up because I'm sure if you have insurance of any form, auto insurance, home insurance, maybe everything except life insurance, okay, because that's like a fixed contract, insurance rates have gone up. And insurance rates have gone up a lot because there's more claims being filed. Governments aren't as friendly. But once again, the forces of the free market and technology and innovation come to the rescue. Self-driving cars could substantially lower auto insurance, for example, because if they're all driving themselves and these cars are all talking to one another, well, the risk for crashes are substantially lower. So you're not going to have to pay a few $100, a couple $100 for your auto insurance anymore. You're still going to need insurance, right? But it's a way to save. And the insurance companies would be happy too, because they'll be able to keep collecting their premiums and they won't have to pay out as many claims. So it's a win-win. And that's how, the future is built. Um, Waymo, owned by Google. Okay. Uber. Garrett mentioned how I like Uber stock. I very much like Uber stock. It's been very good to me. And Uber big on the autonomous vehicles. Going back to Tesla, there was Elon talking about it not long ago, saying how, oh, pretty soon you're going to be able to basically lease out your Tesla to be a driverless taxi, right? So new forms of income. We live in the gig economy, guys, now. The gig economy. So we're going to have all this technology hopefully making us work less, improve our standard of living. And autonomous vehicles is a big part of that story as well. But driverless taxis don't really exist up here much in Michigan just yet. But we have seen over 250,000 paid trips each week across cities like Phoenix, San Francisco, Los Angeles, and Austin. And Waymo is looking to bring their driverless taxis now to Atlanta, Miami, and Washington, D.C., starting in 2026. Okay. So this is why I'm so optimistic about tech, because here you have Waymo and owned by Google. We know that Google's a big market mover, right? The opportunities aren't going away. They're only getting bigger. And there's also the autonomous trucking market growth. I think COVID was a really big reminder. It's crazy to think that it was always that was already 5 years ago. But when supply chains were disrupted, right? People weren't going to work because they were scared of catching COVID. And once the trucks stopped moving, the store shelves were empty. Well, once the trucks are moving autonomously as well without humans driving them, not only is it probably going to be safer, but it's going to help reduce the cost of shipping as well. It's going to make markets more efficient, more efficient. And this is what it's about. It's about investing in these opportunities surrounding efficiency and innovation. Like I said, I'm looking for the S&P to be made up of 70% technology in the next 10 years, not 30%. It's going to double, more than double. Now, even factories are going to run themselves. Okay. And it's already happening. It's already happening, but not at a large scale yet. So what we're looking at, how we're trying to target this is we're trying to spot this trend early, recognize kind of how the tea leaves are set up, and realize that this is only going to scale up. In other words, become more and more common. So Philips, a Dutch electronics manufacturer, for example, only uses 9 workers to oversee 128 robots to produce their electric razors. I use a Philips, but I do prefer to, like the razor shave. But when I got the beard in the winter and in the fall, especially during hunting season, I do use an electric razor to line myself up, so to speak. But I do like the straight razor. But imagine that 9 workers to oversee 128 robots to produce these razors. And it gets even further. There's a factory in Japan, Fanuc, okay? It doesn't have lights on. There's no lights. Why are there no lights? Because there's no humans. Robots aren't scared of the dark, guys. Got a couple kids at home, and fortunately, my son is about to be 3 this fall, and his vocabulary is expanding tremendously. And one of his new things is I'm scared, and he's not scared. He's just he watches his cartoons, and he picks up on those, and it's not even in the dark when he says that. But I say that because efficiency, electricity, lights are cost. They're a cost, right? So these factories that have massive overhead, keeping the lights on being one of them, imagine how much they would save on electric costs. And where does that go to next? That goes down to corporate profits. Higher profits, higher share prices in time. Okay? So that's what we're looking at in this market right now, in this economy, the great tech reset. If anything, I'm looking at that 20% drop that we had earlier this year as a blessing in disguise, because what we did was completely reset the cycle. We reset the clock. We reset the stopwatch on this market. And when technology is leading out of the market bottom, it's a signal that we are in the early stages of a new bull market. The button we hit reset, and it wasn't a human that hit reset. It wasn't the robots. Okay, it was the natural reset. The great tech reset is here. So we've been trading this. I've been trading this, and I have someone that's been trading with me for basically since the beginning that I've been around here at TheoTrade, Dawn. And Dawn trades everything. She trades stocks, she trades options, and she's done very well trading with me over the last couple of years. And Dawn sent me a message. It was really nice. She said, "Can I tell you how much my trading has improved now that I'm trading and learning your techniques? My portfolio is doing so well. Gianni is extremely intelligent about the market. Along with giving you his ideas, he also teaches you how to look for good charts and coaches you through the process. I could not be happier. Thank you." No, thank you, Dawn, for sticking with it. Because when it comes to trading, right, it's so much about having a system. Think about it like a factory, right? There's different parts that go into the entire process before you get the final product. The final product in trading is profits. And there's different parts. And sometimes you have to tweak and work on a different part of the process. And Dawn is absolutely stuck with it. And she's really reaped the rewards of trading together. So now that you know the three sectors that are going to drive this great tech reset, again, the first one being superchip technology, the second one being pocket-sized power, and the third one being autonomous revolution. Let me share with you how I go about finding these stocks. I start with my sector slicing system. I'm what's called a top-down trader. What does that mean? Well, there's obviously a stock market, and then there's individual stocks that make up the stock market. And I'm a big believer in buying the strongest stocks in the strongest sectors in the strongest country. Okay, so I always look to see where the big themes are first. And this year we've seen international stocks do well. Well, now that we've hit the reset button in this market, I'm looking for US stocks to catch up. And so that makes the opportunity even more exciting. So US stocks have actually, on a percentage basis, done better than many international names, many international markets coming out of that low in April. Okay. There's some exceptions, of course, but the US has done better. And the US was not doing so good back in January and February, and that was actually a warning sign. So now that we see the US market doing well, the next step is to jump into which sectors in the US are doing well. I already told you what it was. It's technology. But technology is a very broad, all-encompassing name, right? We know that it's not just tech. There's computer hardware, there's electronics, there's software, there's semiconductors, those computer chips that we were talking about. There's now quantum computing. Okay? There's so many different parts of the tech sector. So what I like to do is I like to compare the various smaller components of the tech sector against one another. And then once I've identified a sector theme within the greater one, an example not being quantum, I mean, you see what's happening in quantum stocks today? You have many of them experiencing large moves. Large moves. And this is a theme that I've been talking about for several months now. Several months. And I'm here to double down and even triple down on quantum computing and just tech in general. But I think quantum computing is especially a sector that is in its infancy. In fact, there was an interview over the last with Google CEO or Alphabet CEO, Sundar Pichai. And Sundar Pichai said that quantum today is like artificial intelligence in 2015. We don't quite understand all of its applications, but what we do know is that this is going to completely transform the way we look at computers into the future. And so the work doesn't stop there, guys. The work doesn't. We identify the quantum sector, which is part of the super chip, right? Because quantum chips are not the same as regular computing chips. I'll just leave it at that. It's really amazing the way those chips work. But we take it a step further, and then I go into the quantum sector and look at individual quantum names. Stocks like Rigetti Computing, IonQ. IonQ came out today and said they want to be the NVIDIA of the quantum sector, and the stock absolutely ripped to the upside. I do own that name, by the way. I do own that name, and it's doing very well. It's doing very well. So basically, by using this tool here as part of my sector slicing system, I look to see whether the line is rising. and it is rising, which tells me that this Rigetti stock is outperforming the broader sector of quantum stocks. So that's the step-by-step process. Own the strongest stocks in the strongest sectors. This is the tool that I use to do so. It's called a ratio tool. It's very good. The next step. So this isn't okay. So I can look at it. I can look at this chart and say, oh, look, Rigetti is doing better than quantum computing. Does that automatically mean I buy it? No. Step two is pattern validation. I am a modern trader in the sense that I learned how to trade on the computer. So here I am talking about technology. If it weren't for technology, if it weren't for computers, one, I wouldn't be talking to you right now. Two, I probably wouldn't be trading in the capacity that I am. I have trained my eye to spot these patterns on these charts. And like I said earlier, history doesn't repeat, it rhymes. And there are certain patterns that present themselves in these stocks that are about to experience major moves. And once we identify those patterns, there's a special technique that I use called, well, it's a special price that I observe. It's called the stick point. And it's a technique that I use that gives me a certain price that tells me when a stock is about to break out. And basically, when the stock gets above this stick point, the probability of a breakout unfolding increases substantially. Substantially. So that's how I took that Rigetti trade. That's how I took that Rigetti trade. So we identified it as a top performing name in the sector. We observed the pattern that was on the chart, and then we looked for the stick point. And once the stock broke above the stick point, the rest is history. The rest is history. The stock absolutely ripped to the upside and led to an absolutely legendary gain. Love to see it. So Jeff's also been trading with me. And, one of the things that I am big on is being methodical in your trading. And, you want to outperform the market, you got to own the strongest stocks. And so how do you look for that? Well, there's a lot of ways to go about it. But basically, if the market's flat, you're looking for your stock to be up. If the market's down, you're looking for your stock to be down less. And Jeff has seen the power in that as well. So what I want to do now is take a moment to talk about the June 4th Ignition Point event, because I talked about how we hit the reset button on the market cycle. Technology has been leading out of the low. A really good sign. Well, there are multiple cycles that exist in the world in which we live. There are multiple cycles that exist in the market that we trade. Okay? So we had a big multi-year cyclical reset, believe it or not, that happened on April 9th. On April 9th. And it was the biggest cyclical reset since October of 2022, guys. What happened in the market after 2022? By the way, what sector did you see leading out of that October 2022 low? Technology. It was technology. But I'm talking about June 4th, and I want to draw your attention to June 4th especially, because June 4th marks the end of an even smaller cycle that I follow, a cycle that is really useful for shorter term trading. For shorter term trading. Now, the cycle could expire before that, but it's not supposed to expire after that. So you have what? 13 days, a little bit less than 2 weeks left before this cycle expires. And this is the first mini cycle that we've had since that August 9th low. So what does that mean? Well, we've seen a little bit of volatility over the last 24 hours. As soon as this cycle resets and we hit this ignition point, the next leg higher in this market can follow. So if you didn't participate in this rally so far, or you wish you would have done better, the next opportunity is coming for big gains within the next 13 days. And it's gonna happen by June 4th, guys. It's gonna happen by June 4th. So on that note, I see Garrett just popped back in here.
I did.
What's up?
Not much. That's awesome because, again, in this environment, volatility absolutely getting wiped out right now. Tech stocks heading higher right now. It's like the market heard you speak about what's coming, Gianni.
And well, that's the ignition point.
Yep,
I just watch
absolutely.
it. So
Absolutely. Well, again, this reset won't wait. And Gianni is absolutely in position. And when it comes to this, guys, you are either watching it happen or we want you to be trading with him. So, really, this is an opportunity to reestablish yourself, to get yourself another chance to take part in what's coming. And that is why we want to introduce you to the Trinity Trade Alerts. Now, stay with me real quick because I want to walk you through everything that you're going to get as being a part of this trading community. And this is an incredible roster. You're on demand, the Trinity Trade Masterclass with Gianni. You're going to discover all the secrets of the Trinity Trade. You just saw what his students are saying. You just saw the types of trades that he's pulling, and you already know that ignition point is coming up on June 4th. This is an opportunity to trade and show how to get access to these high probability profits. This is a $3,000 value. And as we said, real results, real members. Hi, Gianni. I spent the weekend looking at my accounts that I trade. I'm so pleased with the results I've received. I would like to see my accounts double in 2025. And I believe, if not more, and I believe that's possible. That is Shirley. Go to theotrade.com/Trinity, and we're going to walk you through, again, all the other things that you're going to get. In addition to the on-demand, the Trinity Trade Masterclass, you're also getting the Trinity Trade Alerts. We're talking at least 52 alerts over the coming year through email notification, a $2,400 value. In addition to that, the Trinity Trade coaching calls 2 times a week with Gianni, providing continuous updates and insights. So that's 1, 2, 3 things on demand: the Trinity Trade Masterclass, the Trinity Trade Alerts, and the coaching calls. But that's not all. There is also the Trinity Trade watch list. This is updated as markets change. And as you know, markets have been changing quite a bit in 2025. So that list constantly updates. You know exactly what you should be watching. You know exactly what Gianni should be watching. 65 plus Trinity Trade watch list. $1,000 value on top of that, plus the real money Trinity Trade portfolio. This is a $100,000 real money portfolio that is tracked and managed for the long term. And once again, taking advantage of this massive technology shift that is underway and positioning ahead of that June 4th event, another $2,000 value. Johnny is looking to the long term. This is not just about trading in and out every day. It's not just on the weekly. It's very important that you understand that this is about the long term, about having somebody with you in your corner. And that is why it is important to have quarterly forecasting. In addition to doing those 2 times a week calls for training, we're also going to be providing the quarterly forecast. So strategic quarterly coaching event that takes part every single quarter, $1,000 value, plus weekly video updates. So in addition to those calls, in addition to those forecasts, in addition to all of those trades, weekly video updates that provide up to the minute updates on what's happening in the market, what's happening with these trades, what's happening with everything that you should be looking at, and having the opportunity to look over Gianni's shoulder to get a better sense of what's happening in real time in the market. But this is one of the most exciting parts of this, and that is the monthly lotto trade. So our focus here is taking that little tiny slice of the Trinity Trade profits, the profits that Gianni has shown you how he creates, and then deploying them into high upside moonshot plays in the Trinity's hottest sectors. So keep this in mind. You're going to look to take advantage of this huge opportunity in the tech sector, look to scalp those gains, and then put it onto the things that have strong probability, looking for high upside moonshot trades that can deliver significantly more gains than what you're generating through this form of trading. And the results are real, and these members are real. I cannot emphasize how incredible your recommendations have been for me. I don't get to join in on your live sessions on a regular basis, but I try to catch up on your sessions after hours. Thanks for making the incredible recommendations and analysis. And that's another important thing to keep in mind. You can access all of this stuff 24 hours a day, 7 days a week, once again, the on-demand masterclass with Gianni, the trade alerts, the coaching calls, the watch list, the portfolio, the quarterly forecast, the weekly updates. They're all at your fingertips whenever you need to watch them. So everything is built around your schedule. Now, let me show you again everything that you're going to get. This is a $12,400 value, and today it is under $2,000. You have the on-demand Trinity Trade Masterclass with Gianni DePoce. Discover all the secrets of the Trinity Trade and how to hide. They hide such high probability profits. The monthly lotto trade, once again, taking that little tiny slice of profits and looking for that massive upside. We call it a lotto trade. In trader speak, we're looking for massive, massive returns on a very small trade, right? Little time, like the cost of a dinner, and you're looking to make huge gains in the process. This is a $2,000 value. That alone is valued at more than all of this that we have put together for you today. In addition to that, the Trinity Trade alerts, 52 alerts coming over the year. Again, these are going to be email notifications in addition to the 2 times a week coaching call with Gianni. It provides continuous updates and insights. You have a watch list that is regularly updated. You're going to be able to look over his shoulder at any time, know exactly where those opportunities are. He walked you through just a little while ago the very simple process that he goes through. This sounds complicated, but identifying the sector kings, the pattern validation, and observing that stick point in order to deliver trades like that 537% gain, like that 554% gain as part of multi-legs within the trade. To know what those potential stocks are and what those potential trades are, having that watch list on a regular basis is absolutely critical to your success. Once again, this is a real money portfolio. This isn't speculation. This isn't paper trading. This is a real money, $100,000 Trinity Trade portfolio. That's our focus here. Tracked and managed for the long term. $2,000 value in addition to the quarterly forecasts with strategic quarterly coaching events, the $1,000 value, and the weekly updates. Again, this is all around your schedule. So you can take a look at that. All of those incredible opportunities, incredible parts of this package in an incredible price for $1,995. But here's the additional bonus, a 30-day money-back guarantee. So all of those benefits, all of those things that are being put together today to maximize your potential success, 30-day money-back guarantee. And if you are not satisfied for any reason over 30 days, email support@theotrade.com and receive a full refund. There are no stipulations around this. There are no excuses. There are no questions. You don't have to take any course. You don't have to get on a phone and ask people for 50 different things that you have to check boxes. If you want a refund, you get a refund. But my confidence is that when you look and you see all of the things that you are getting today, the Trinity Trade Masterclass, the Lotto Trade, the alerts, the coaching calls, the watch list, the real money $100,000 Trinity Trade portfolio, the quarterly forecasts, and the weekly video updates, you're not going to want that money back guarantee because you're not going to want a refund because you're going to see the real value that is being delivered today. theotrade.com/Trinity. Easiest way to just check that out. You can also give us a phone call. We're going to talk about that in a second. But real quick, I want to just point this out. There is an additional bonus today, and that is unlimited email mentoring. So if you have questions, there's always someone there at any moment to provide that insight. But there are only 50 spots available right now. So act right now. And once again, going back up to the previous 3 slides, if you just look at everything that you get, the Trinity Trade Masterclass with Gianni, the Lotto Trade, the trade alerts, the Trinity Trade coaching calls, the trade watch list, the $100,000 Trinity Trade portfolio, the quarterly forecasts, and those video updates, plus unlimited email mentoring and a 30-day money-back guarantee. Guys, this is a no-brainer. $12,400 retail value for under $2,000 today and that money back guarantee. theotrade.com/Trinity. Click the link in the chat, and we're going to take some questions. It's always important to answer some of your questions. There are a couple very simple things that are important to note, right? What are the common things that people are always asking about? What do you need? Okay, you need a laptop and an internet connection. You can get a laptop pretty much anywhere. I think they just walk outside. They probably some just sitting outside. But internet connection, you can do this from anywhere. That's the point. You could trade on your phone. You could trade anywhere on earth that has an internet connection. Go to Starbucks. Go to a restaurant. You can come to my family's restaurant and trade from there if you want. No questions asked. It's all you need. It's very simple. This is not a membership. We will not auto renew or bill you again. This is for Trinity Trade, 30-day money back guarantee, all of those benefits. This is not a membership. We are not going to auto renew. And once again, you have a 30-day money back guarantee. You will get weekly alerts and video updates so that you can follow all the moves we make in the real money $100,000 portfolio. You will get access to private Trinity Trade Room where all of those trades will be posted. You can use any broker you want to enter Trinity Trade. You can use retirement accounts to enter Trinity Trade. You can email us anytime, and you will receive a response within 24 hours, including trade-related questions. And I think you all know, anyone who has sent us an email, you know that we are on top of this. We have a world-class leader who legitimately sends us emails reminding us to check the emails and to reply back. So you're not just reaching out to Gianni. You are hearing from an entire team here at TheoTrade that regularly ensures that all of that communication is met, and that is part of this unlimited email mentoring program. There are only 100 spots available right now. Actually, no, we cut that. There's only 50 right now. Somebody made an error. I know there's only 50 about right now because we had a conversation about that. So there are only 50 spots left for that unlimited email mentoring. 30-day money-back guarantee. Get the results, take action, enroll in the Trinity Trade now. There is no risk for you. We are taking that risk off of your shoulders. Again, with that 30-day money-back guarantee. Call 623-244-5657. Set up your account and start trading with Gianni. theotrade.com/Trinity. Shirley's saying, I've traded on my phone while traveling. That's exactly the point. Even when you're dealing with all the problems with Delta, let's just make up a terrible airline, Delta. Anytime that you're having a hard time with an airline, you know that you might be on the phone with them. You can still trade while you're on the phone. You might be on hold for 15 minutes, but Gianni's going to be kicking back with some ideas, showing you the watch list. You can do this from anywhere. We're focusing on equity stocks, no options, no short selling. Anyone can do this. You don't need to have to qualify anything with a brokerage. Beautiful thing about trading stocks, no commissions. Just actively trading great names, stocks with great potential upside. Gianni has shown you over and over again what that setup looks like. It's a 3-step process. It's not that complex. The 3 sectors, that sector slicing system that he digs into, identifying those kings, validating that pattern, and then observing that sticking point of knowing exactly when to take action. And you're going to have 65 stocks as part of that watch list that at any time, once it meets those measures, it's time to make that trade. And that is what can deliver 537% gains, 554% gains. That's what you're looking for. So again, 623-244-5657. Guys, this isn't complex. Don't want to be on the phone? TrinityTrade.com, or forgive me, theotrade.com/Trinity. All right. Any other questions that we can answer? And Gianni, I want to bring you in just for a couple quick questions.
Yeah.
You know, in an environment where sometimes things don't happen, I think that a lot of people that I have worked in this industry for a very long time, there is always a temptation to force a trade Or sometimes people might look at your watch list and try to take action on just using the watch list to try to trade actively. Kind of give us a sense of, what your risk management, what your discipline looks like, and how is the optimal time to pull the trigger, and then what does that communication look like with members of Trinity Trade?
Absolutely. Well, first of all, I strongly encourage people to use that watch list. I mean, obviously, we're not buying 60 some stocks at a time in a portfolio, because that's not how you get the performance numbers like we have over the last few years. But what is taught is, especially in that masterclass, which is where I encourage anyone that's joining to begin, watch that masterclass, because what it does is take you through a step-by-step process on how every trade that we put out is run through the gauntlet. So it's a very specific system, specific entries, specific stop losses, specific targets. And I teach you how to get all of that. The way I run my trading, Garrett, is, and it's a bit of a cliche, but it's true. And I actually show the math behind this. Cut losses short, let winners run. My break-even rate as a trader is only around 25%, meaning that to not lose money in the long run, I only have to be right 1 out of 4 times.
Hmm.
Okay. And the winners are going to be bigger than the losers. That doesn't mean there's never losers, but the winners are always going to be bigger than the losers. And that is really the holy grail of trading, beyond having this sector slicing system, beyond knowing how to identify the sector kings and observe the patterns and finding that stick point, which I show you how to do everywhere. So I send out at least one trade idea per week. Well, I should say 52 alerts per year. Sometimes you'll get multiple trades per year. And the way I send it out, you'll get an initial notification, sent to your phone or sent to your email, telling you the trade instructions, how much to put on the line, where your stop loss should be, where you want to buy, what your price target is. And then I follow through shortly after with a detailed write-up on exactly what we're looking at, because I do want people to understand why we are doing what we're doing. There's a big educational component to it as well. So it's not just like, oh, hey, I woke up today and I thought this stock looked good. No, it's a specific step-by-step process that we follow to put the odds in our favor in the long run. And that's really the name of the game when it comes to trading.
It's interesting you mentioned this thing about 25% aim for, what are your profitable trades. And one of the things that I think is very important in these conversations, and why I come in and I have the conversation with you and we talk about the value of this, and I want to really speak to everyone in the chat about this. I have a deep background in academic finance. And a lot of this goes back, and what Gianni is focusing on, and this is why it gets the rubber stamp of approval and why it's such a brilliant trading strategy. This goes back to 1956. This is called the Kelly criterion, and this is all about optimal bet sizing. This laid the groundwork for logarithmic utility. It laid the groundwork for the importance of asymmetric bets and understanding how to control your downside, but focusing on the upside. There's plenty of reports that I can mail anyone who wants to read any of this. There's something called skewness preference theory that goes back to 1980s. Gianni is rooted in all of the elements of prospect theory and behavioral finance and the things that matter about the idea of ensuring that your losses are small, because people hate to lose. There's being a loss averse person, you want to ensure that your losses are tiny and that your gains can be significant. It's an element called skewness, positive skewness. So being efficient about your losses, but taking that shot, that lottery-like payoff, is exactly what caters into the desire of most traders. They want to have positive skewness. They want to have these huge payoffs. But if they don't manage it the right way, and they're wrong 3 out of 4 times, they're not going to be trading very long. But if they learn the right way to do this, and they have the right type of mentorship, and they have the right types of tools in place, and they know what the stocks are, and they know exactly what the entry point should be and what the exit points are, that's what leads to the performance that we talked about at the very onset of this conversation. 513% against 124% in the S&P 500. So Gianni is doing this absolutely the right way on how to manage lower probability, but significantly upsized gains. So if you are a person who is willing to take on a little bit more risk with each trade, you should recognize that mathematically you want to be the person who gets to eat the bulk of what they kill. And this is that powerful type of trading that has massive, massive, massive upside. And it's the difference, I promise you, between trading and gambling. So once again, pay attention to this. The Trinity Trade Masterclass with Gianni, $3,000 value, monthly lotto trade, $2,000. Again, playing directly into decades of brilliant behavioral finance and decades of brilliant trading strategies. The Trinity Trade alerts, 52 alerts are coming over the year. The trading calls 2 times a week. This is important. 2 times a week, you're going to get updates, plus the watch list with all 65 plus of the names that are hitting those credentials at the moment. In addition to that, the $100,000 Trinity trading portfolio, the quarterly forecasts, the weekly video series, in addition to the unlimited email mentoring and the 30-day guarantee, money back guarantee, $1,995. Go to theotrade.com/Trinity. Call 623-244-5657. You had a lot of really positive feedback from some of your students. Tell us about what those weekly calls and those weekly meetings look like.
Well, I'm so glad you brought that up, Garrett, because I was actually going to raise a point on that. So we actually have our own chat room together, those that are in the Trinity Trade together, and that's where we do these twice a week coaching calls. And basically, we're reviewing the overall market. We're looking at where we are, not just from a price standpoint, but also a time standpoint. And that's when it comes back to that ignition point of June 4th. And, I think that's what prepared us so well to capitalize on the market rebound that we saw out of that April low. It's because we knew that multi-year cycle was coming due. And even though, I wasn't out there saying, guys, this is the absolute bottom on the absolute price on the absolute minute, we were ready to buy. We were ready to buy, and that is what made the biggest difference in the performance coming out of this market low, because we were observing the elements of time that often gets overlooked in a lot of trading styles. So we talk about where we are from a technical standpoint. What are the emerging sector kings? What sectors are hot? And then we look at the actual portfolio. So I'm always updating members on what stocks we have, what stocks we're looking at, and then, hey, if this stock is working for us, how do we manage this position? So I'm not just sharing an idea with you, a trade idea, and saying, okay, best of luck. I am continually touching base and updating you. Hey, this is what we need to do now. This stock is working in our favor. This is where the new stop losses, or maybe we need to raise the price target a little bit. Each trade has its own unique way of being managed. And I think that's where a lot of the value comes in those twice per week meetings. And then it's an easy way to stay in touch with me, because I'm in that chat room every day, multiple times per day. And so it's not just the unlimited email mentoring. I think for the long form questions that people have, that's easier to ask in one place, obviously. But if you have a quick question, I'm in this chat room all the time where you can ask me whatever you like. So it really is, I think, a great feature of the Trinity Trade.
That's awesome. And you do not trade options. You're not trading futures. You're focusing on stocks. You've been trading stocks your whole life. What is it about stocks that you can prefer over options? Because trading stocks, this is something that, a lot of people, they try to dive into options. They may not have the education or might not understand the math behind it. But this is pretty straightforward. And usually people look at stocks and they say, wait a minute, I can make 300, 400, 500% gains on an equity. I thought that was just limited to options trading.
Well, 2 words: time decay. Time decay. That's why I have found that in speculation and in trading, for me, I vibe with stocks. I resonate with stocks because I have no problem after an initial move up. Stocks a lot of times will either give back some of their gains or go sideways. It's a very common behavior that we see in the price action of a stock. And so if you're holding an option, you'll get punished for that. You will see the value of your position go down. And so I mentioned this earlier. I'm a big believer in cutting losses short, letting winners run. And one thing about my losing trades that I'm not in them for long, but on my winning trades, I'm in them for a lot longer because
Hmm.
we're just basically padding the gains on top of one another. So that's why I like the stocks. And as long as you know where to look for them, and that's what I teach in the master class and what we reinforce, not just in those twice per week meetings, but also in that quarterly master class, the quarterly forecasts, which I cannot speak enough about. The next one's going to be on June 11th, by the way,
Hmm.
because we basically lay out the roadmap for the following quarter. So again, this isn't these aren't ideas off the cuff. These aren't ideas based on rumors or headlines. They're all run through a process that I teach in the masterclass and that we reinforce continuously because repetition is the foundation of learning at the end of the day.
I want to point something out about a chart that you showed earlier, and it was about the Great Chase. And you were
Oh yeah.
talking about the fact that it's our 12th slide, and you were saying that you're not a person who's really into fear. And I want to point something out, just kind of looking at what really cements this thesis that you have, what makes it so critical. If you look at May 2025, and you see that big decline, look to the left. What's the period before that? That's late 2022, 2023. Guys, what happened after that? All of those fund managers were short. Everybody was heavy net short heading into 2023. And a lot of people missed the first quarter gains that happened, and everyone was chasing up until we hit those recent highs. You can go back into 2018. Same thing happened because of the Volmageddon and concerns about the bond market. We ended up having this pivot and this huge move higher. Same thing happened in 2015. That was China. Same thing happened in early 2010, 2011. That was Europe. And then that huge run up that happened in '06 into 2008 plus 99. Like people keep saying, well, there's going to be a big crisis around the corner. It typically doesn't happen when all of the fund managers are on the sideline
Yeah.
looking up. It typically happens when you're up in those net flows of 20, 30, 40%. And that's what a lot of people have to understand. We are not done yet when it comes to liquidity, and we are not done yet on moving into the next cycle. So again, tech stocks lead, high beta leads, and that is where that opportunity is really emerging.
Well, I think this chart says it all right here,
Yeah,
Garrett.
absolutely.
Yeah, and there's time left in this rally, so we're early, and that's why we wanted to share this information with you today because what are we? Only 6 weeks from that low?
Yep.
So
Yep.
42 days.
Yep.
And we've seen tech lead. This was a very normal market environment over the last 6 weeks. And
Yep.
as you can see, you really have another, what, 80 days or so before
Yep.
tech starts to drop off. So another 2 to 3 months
Yep.
where technology should, by historical metrics, be the leading sector. And
Yep.
tech's 30% of the S&P. It's going to be good for the overall market. And that's not a popular
Absolutely.
position right now. And I'm
It
okay
isn't.
taking that stance.
Yeah, and Scott just put something in the chat that I think is another important thing. You combine both of these things, the combination of the art of the deal, a lot of money on the sidelines. Keep in mind, where are the Saudis and the Emiratis and people in Doha investing? They're investing in AI and data infrastructure. They're putting their money here for that. So you want to invest alongside the sovereign wealth funds, that's a place to be. So we have to wrap it up, Gianni. We got 2 minutes left. I want to thank you for your time today. Again, I want to just show everybody one more time. You can give us a phone call. Pretty easy to do. Pick up the phone, 623-244-5657. Take a look at everything you get. The Trinity Trade Masterclass, the Lotto Trade, the trade alerts, 52 alerts over the coming year, the coaching calls 2 times a week. Gianni just went through everything you can expect. Quarterly forecast, weekly video updates, $100,000 Trinity trade portfolio, and again, that watch list plus a 30-day money back guarantee. You don't like it? Give us a phone call. Give us a call. We will take care of you. There are no stipulations. And of course, the additional thing, unlimited email mentoring. Guys, this is too easy. Theotrade.com/Trinity. 50 spots available. Act now. Join Gianni. Give it 30 days. I guarantee you, you're going to absolutely take something away from this that will absolutely transform the way that you look at markets. Gianni, I want to thank you so much for taking the time to join us today.
My pleasure, Garrett. Thanks for having me.
All right, again, everybody, Trinity Trade, go to theotrade.com/Trinity, or again, give us a phone call, 623-244-5657. My name's Garrett Baldwin, and I am calling it a day. Thank you all for taking the time today to join us. Transform your trading future. Again, 623-244-5657 or theotrade.com/Trinity. Have a great day, everybody.